is your agent trading the way that it's actually outlining that it should be trading. The assets under management were like fractions of fractions smaller than the peak market cap, which just means that someone is paying like $10,000 to the dollar of what was actually being managed. A lot of these trading projects were not very sophisticated, and they know that this is like the first iteration or like a first stage.
Welcome to Dry Run, Amy.
Thank you. Very excited to be here.
So the agentic trading landscape has evolved a lot over the last couple of years. Now there's multiple tools in the market, but we've actually seen little to no data that shows how well these products have done. So in your research, you and your team tackle this. Could you start by talking about the motivation behind the research covering trading agents in DeFi?
Yeah, definitely. And hello to people who don't know me. I do research with IC3, or our group calls Initiative for Cryptocurrencies and Contracts. It's co-directed by R.A. Jules from Cornell Tech, as well as a couple of partnering universities across the U.S., like CMU, Berkeley, and UIUC, just to name a few. But yeah, this project spun out of some interest from our team, where we were looking into these DeFi agentic trading platforms that were gaining a lot of hype and popularity in the winter of 2024, the fall winter of 2024. So that was very large hype cycle that we were seeing across social media channels on X, general coin and market websites. And we tried to distill whether there was something interesting that was to be dug up there. So first, it was understanding what the actual landscape was, whether this was something that was worth studying in more detail. At some point, the market caps of these projects were, over $2.5 billion. So we were like, okay, there's definitely some buy-in and a lot of hype and actual funds that are surrounding these projects. So for the sake of both users, consumers, and also understanding from an analytical perspective what's happening here, we decided to take an empirical approach to understand the current landscape. So I would say this project definitely dives into these specific DeFi agentic trading platforms in crypto markets, but also could be applied for future projects that deal with LLM trading and broader topics in the future as well.
Yeah, that's really interesting. And so you mentioned that you guys did the work of narrowing focus down to AI/crypto projects that are that touch money or they manage money, or they are trying to assist in trading in some way. Could you walk us through what you found when you looked at what these agents are capable of, or versus what they were claiming to do?
Yeah. So as you mentioned, we broke down the sections of discovery into three main parts. So the first was this broader part of like, what does the investment landscape look like as a whole? Because there were so many different types of platforms. There are, traditional yield-bearing platforms that take on a user's investment and just grows it at a steady rate. There are also platforms that give advice and are just Twitter bots, essentially, or X bots that provide investment advice or news about what is happening in the ecosystem. And then were these platforms, or more properly, frameworks that were actually used for agentic trading to happen on DeFi markets. And so those were actually touching money. Those were, supposedly making trades autonomously and provided connectors out to different sources to inform trades and how to invest users' funds. So that's what we focused on. The two frameworks that we ended up narrowing down to were Eliza OS and Virtuals protocol. And the reason why we picked them is because it was the most transparent in terms of what we were able to trace. We were actually able to see treasuries and also token launches and see movement of money from users that were investing. And also, there was the most, I guess, hype. So the largest market caps is what we were looking at. So some of those stats for our approach were looking at just the highest values and where we were seeing the most investment from users. So that's how we found our initial list.
And so you mentioned Eliza OS and Virtuals were the main projects that you guys dug into. What are the reasons they're so popular with users? Is it because the similar transparency that you mentioned? Do you think that is something that resonated with users?
To be fair, I think there was probably some social media and hype cycle that drove interest in here. The original naming of uh, this AI agent or DAO agent was also AI16Z. So I think the naming of it was also drawing interest. Um, and I think because of that, yeah, more broadly, people were interested in getting access to what was pitched as a democratized hedge fund trading strategy or some like more sophisticated trading strategies that weren't necessarily available to the average person. And so these trading platforms would be able to do something better than what is possible by just people out there currently.
Yeah, no, that's a good point. And while the initial interest in the like Virtuals and Eliza it was definitely driven by hype. How have these two platforms evolved then over the last like 2 years to kind of match with how users are using the two platforms?
Yeah. So if you look at in terms of the um, social media hype as well as just general data and statistics about trades that are happening and the amount of volume that is within those treasuries, there is a typical hype cycle and a quick decline into the spring and summer of the following year in 2025. So actually there was a quick deflation of all of this noise. And even though this original premise of like Eliza OS and Virtuals framework have largely died down, there are surely going to be platforms that follow after it in terms of new models or new frameworks of people and how they invest their funds. So, in particular, how they work is they have these like connectors that look at, say, GitHub repos or X profiles and news signals, and then inform some decision of trade to make. Generally speaking, when we dove into some of the research and tried to get the empirical analysis of what the actual holdings were and how they were making these trades, we found that a lot of these, like Eliza OS and Virtuals, were holding on to small cap tokens. So not large cap tokens like Solana or Ethereum or other assets that are more commonly out there, but pretty low cap tokens, which tended to be more volatile. And because of that, I think there was also a lot of ability for those trades to be influenced by social media hype or bots that are on X. But I think based on what we've seen across the landscape, there's also a disconnect between the average user experience of investing in these platforms and then what the treasury experience is from a net profit or loss situation. So on average, the loss amount for users was quite high. It's around 190 million in total funds across the many different projects that we looked at. And then on the other hand, many of these treasuries or these AI agents turned like either low amounts of profit or netted out to like 30 million in profit. So actually, there's this disconnect between the amount of profit that was being made by treasuries and actually what was happening on the user side. And then there was a very small number of users, like 1% of the total wallet addresses that were investing, that were making like 80% of the total profit of the user wallet addresses. So again, there's a couple of things that can be improved on for future iterations of these types of agents beyond just this first approach with Eliza OS and Virtuals.
Those are really interesting data points. So on that point of there was only a small number of wallets that captured the most gains. The majority of users ended up losing money. That pattern is very typical to a lot of what we've seen in crypto. But in this context, is this just what an early market looks like, and that's what we can chalk it up to be, or is there something more predatory that was happening with these
Yeah.
forms?
So I guess attributing the actual reason for why small numbers of addresses were profiting and others were not, that is not something that like we can ascertain necessarily just from the data, but it is possible that, that 1% is, potentially an insider trader or someone who knows information ahead of the crowd and is able to place, an informed trade. Or alternatively, there's like a small likelihood that it was, just genuinely a very good trader that was ahead of the curve and able to place trades ahead of the rest of the crowd and able to profit off of other agents that were trading in a less sophisticated way. So we can't really, you know, attribute the reason as to why this is happening. But one of the things that we do see is because of the types of coins or tokens that were being held by these projects. There's a low amount of liquidity, first off, in those tokens, and also a high amount of volatility, which just means that you're going to end up with more crowded trades. Also, instead of using, like traditional established assets like Solana or USDC, um, this is definitely a much less mature space in terms of the actual like tokens that are being invested in. And I would say that, a lot of this too is revolving around like hype or almost like a meme. You can think of this as like a meme coin investment. So because of that, any hype that was driven by, say, like X posts were also crowding out a lot of trades. Say you had like a platform that was looking at X4 signals of which token to invest in. It was likely then that many of these platforms were trading off of the same signals, which was creating very crowded trades on the same information. So you don't really have like, again, that sophisticated level of trading that was originally advertised by these sorts of agents. So those are a couple of types of reasons for why I think the profits and losses across treasuries and users played out the way that it did. There's definitely more maturity that that can be had across the ecosystem in terms of both the assets and the types of agents and how they perform their trades.
Yeah, I think part of the reason this research is really interesting is you guys kind of looked at what was happening with existing platforms, but it also kind of showed how users are using and how like these platforms are working for them and what the gap is between like what is perceived to be the capabilities of these platforms versus what it actually is. In the research, there was a quote that LLMs cannot trade well without human insight. But at the same time, we kind of saw these platforms in billions of combined valuation. Um, and users have been kind of using these products kind of with the assumption that it is truly trading on your behalf. Are these platforms being marketed kind of truthfully at this point? Or is it just like, I think there's another part of it where there's a token involved. So the users aren't like necessarily approaching these platforms just specifically for the trading function. There's also like a token component.
Yeah. So maybe I'll speak to basically how we recommend trading platforms to evolve in the future. So, in terms of transparency and opaqueness of trading platforms, all of the projects that we looked at were like black box projects. So, none of these were clearly divulging, what their trading strategy was from point A to point Z. And in one of our other papers where we discuss like the security trade-off between profitability and transparency, we analyze coin algs. And so the tension there is that if you have a black box algorithm, you could be doing whatever with your investors' funds. So you don't necessarily have to be trading autonomously, or maybe you are at risk of getting rugged or having your funds completely taken away from you if you have a black box algorithm, right? If you have a transparent algorithm, then what we found is that you can actually have a lot of your funds front run. So your funds can be, not as profitable if
Yeah.
you have a transparent algorithm that showcases what exactly you're trading. So there's this trade off between the transparency and profitability of how you're making those trades. In terms of current state, these were not transparent projects. So what could be happening is that there could be manual trades that occur by these agents. So someone could be like behind the screen clicking buttons, or people could be using like pretty general automation and, taking some broader signals and then committing a trade on like some regular basis. But in terms of, I guess, like what things are what is able to be done actually by AI or like agents and LLMs as of right now, I think you can automate processes really well. Right now, you can get a lot of information from what's happening, and I think that's fine from a perspective of information gathering. But whether you're able to actually conduct sophisticated trades and like find the right hypotheses to get profitable trades, that's a slightly different question that isn't necessarily addressed by just slapping on a LLM or agent onto a problem. So I think that's the distinguishing factor for what we found is that, a lot of these trading projects were not very sophisticated. And we spoke with teams across Virtuals protocol and um, also Eliza OS, and they know that this is like the first iteration or like a first stage where many of the projects are not actually moving in a very sophisticated way. But in the future, I don't doubt that this is possible. I think there's a very realistic likelihood that there will be more sophisticated traders and more sophisticated automation of what gets traded based on signals that are existing out there.
Yeah, that makes sense. To kind of touch on that a little bit more. So for the things that can be done today with AI, that's sort of useful for a trader. A lot of it is still kind of like the trader would have to go forth and like build out their own, for the most part, their own algorithms, their own automations. So essentially the tools at hand today are best fit for a more sophisticated trader or like a trading shop or one where there's just more resources. At the same time, we saw a lot more of your everyday or more of retail entering the market when it came to some of these platforms, right?
Yeah. So for future improvements of investment grade agents, we proposed a couple of things that need to be in
Hmm.
place. So the first is this verifiable autonomy. So is your agent actually doing what it says it does? And maybe that isn't like transparency entirely, where you have to reveal what your agent does, like from start to finish, but at least getting some attestation, right? You could use some attestation that goes in there and verifies, okay, does your agent do what it says it's supposed to do? So that's something that we would recommend for, is your agent trading the way that it's actually outlining that it should be trading?
Yeah.
The second is having like risk adjustment in your profits. So many of these platforms, they don't have this like emergency stop or floor in terms of where investment funds can go. So ideally, right, you invest in something that has been tested, has a good hypothesis, and is making more money for you. But if there is, say, like a lot of funds leaving, or the value of your investors' funds are going down dramatically, you should be able to have some way of protecting investor funds and having risk-adjusted profits. And then
Mhm.
finally, we also recommend having some stakeholder alignment, which just means, if a treasury is profiting and also if it's, doing well, the users or the investors should also experience that same sort of performance or trend line in their returns as well. So in some of the situations, we see a stark difference between the total treasury profit versus the loss that is experienced by the user. And um, like any, stakeholders that are investing in something, they should have alignment between the actual amount that is being profited by the parent organization or treasury, and also how much the actual investors are putting in.
Mhm. Are there some protocols already that are taking steps towards building out their platforms tied to kind of how you guys think the things should be done as the space matures?
Yeah, whether there are live protocols in action out there, I wouldn't be able to answer that in full right now.
Mhm.
I'm sure there are people building out there right now on some of these aspects.
Okay.
Um, and actually, one thing that I do know for sure is that there are EIPs, so Ethereum improvement protocols like 8004, which recommend things like trustless agents, right? So, how do you have a reputable and verified agent? And this came in a little bit later after this hype cycle of Eliza OS and Virtuals protocol. But I think it's a very neat way of solving some of the trust issues that maybe like users can report themselves of um, how an agent is behaving in comparison to what they were originally expecting, right? So
Mhm.
EIP 8004 has three different um, tenets. There's a ID registry, a reputation registry, and a verification registry. So combined, those three things should be able to showcase to people what the most trustworthy or, what the rankings of agents are, depending on whether they're doing what they actually say they should be doing. We also have a paper that kind of enforces this idea too. So there's a paper called PyCreds, which is able to provide like an attestation of does an agent actually say or do what it says it's proposing that it does. And combined with these different, both the EIP and also some of the technologies that we recommend, I think it is possible in the future to have agents that are acting more truthfully, that are um, able to be held accountable by a community and um, verifiably get like approved for whether something is completing the goal of what it sets out to do, right? So I think the original goals or the original ethos of many of these first generation DeFi agents were not met, but what kind of recourse is actually given to investors to report back on that, right? Maybe some social channels or some platforms, but nothing that really, I guess, enforces reputation onto an agent. So I think that is definitely a path forward in terms of what we see in the ecosystem right now. And whether there are companies or people building it, I'm sure there are. But yeah, probably in early stages, at least as of right now.
Yeah, super interesting. Um, and so while your research primarily focused on trading on chain, the idea of trading on your behalf is happening broadly. How much of what you found is specific to DeFi, or do you think there's some similarities from this research that can just be applied broadly to anyone that's handing over money to an AI system to trade on their behalf?
Yeah, I think from the perspective of like, does EIP 8004 apply to just regular AI agents not in the DeFi space? Absolutely. Like, I think yes, entirely. Like, it doesn't have to touch, say, DeFi funds or crypto. But what it does propose is this connection to a blockchain registry in order to prove to people that there's a identity, a reputation, and verification of what it actually does. So in terms of like blockchain and agent trust working together, I think that there's definitely a solution there that is going to improve how agents are trusted moving forward, regardless whether it's in the DeFi investment space or not. Um, yeah, and I would say more broadly speaking, just in the regular financial space, right? You have a lot of financial tools that are existing out there, like if you have a retirement account, or say like an HSA. Many of these companies allow for investment that's managed on your behalf. So you can, select funds yourself to invest in, or you can say, hey, I want this company, this financial company, to do my investments for me, right? I want them to choose whatever is best, and I don't really want to think about it. And in my opinion, that's pretty close to what agent, like a investment agent in the DeFi space, should be doing. And the main difference or a gap that exists here is, I guess, people who are in the financial services space, they have to abide by regulations of fiduciary duty and, acting out of their best interests, or have the law come after them if they don't. And there's not really a tie-in to legal repercussion, I think, in DeFi trading or agents in that way yet. And and I think if we can emulate more of that, or hold more accountability for funds that are being processed in the DeFi space, that would be an improvement for sure.
Mhm. I have one last question for you. What was maybe something unexpected that you learned from this research? Or I know you guys are continuing to do this work, but curious about some unexpected things that you've learned about maybe how users work or how maybe agents work around trading.
Yeah, it's a good question. Um, I think shock factor wise, it's hard to believe that like 3 billion was the peak valuation across the projects that we looked at. Like that's so much.
That's
It's so
money.
large. Uh, and the shock factor too is like how much, if people, I don't think this information was actually very readily available to users or investors, but after we did our research, looking at the actual assets under management for each of these platforms, the assets under management were like fractions of fractions smaller than the peak market cap, which just means that, like, someone is paying like $10,000 to the dollar of what was actually being managed, which is like insane. It just shows that there's a lot of like narrative speculation in those projects that were being looked at. And I think the other thing too is like, as we've continued to do this research, at first we were debating the long-term viability of how applicable this would be to future work. But we have still seen, this in many forms, with Anthropic releasing new AI agents for financial services firms, or like Nansen bringing on agentic trading on chain, or, people building their own OpenClaw crypto trading bots. So I think there are many offshoots of this original first generation, as I've worded
Yeah.
it before, and that there will be, there will continue to be more sophisticated or just more things being built. And I think it's important to think about like how they can best serve investors and and protect like investments for the people that are putting their money into them.
Well, Amy, appreciate you coming on and sharing your insights from the research. Where can our listeners go to read the paper itself and follow what you're working on?
Yes, you can find it on Archive. If you go to archive.org, that's spelled arxiv.org. Or if you just Google paper agents, paper gains, you'll see our listing of an empirical analysis of DeFi investment agents. And you can also follow my colleagues, Jay Yu and Danning Sui from Pantera Capital, as well as myself on X. So feel free to follow along and see more research come out as things progress.